Hello, everyone. Welcome back again to another Lunch and Learn webinar series. I am your host, Meyer Thacker. I'm the Senior Relationship Manager here at Zacks, and it's my job to ensure that everyone is happy, first and foremost, with their Zacks service, and secondly, to provide training and ongoing support. And that's a part of the reason why we have these recurring webinar presentations, is just to show some of the tools that you may not be familiar with in Zacks. And there's a lot that we have in the ZRS system. And, sometimes it can be overwhelming, but that's why we are always here to act as your support line. So I'd be, again, more than happy to provide you with, additional support, even beyond just these general training calls. If anything that you see here that you do like or would like to go into further detail, you can always email me or email the entire team here at zrs@zacks.com. Again, zrs@zacks.com, and that comes, to me as well. So I'd be happy to help out or help you build some of the charts and views that we're about to see here today. And if you have any questions during the call, go ahead and type that into the GoToMeeting, questions section. It's on the panel itself. So if you have questions as we talk about some of these things, just type them out, and we'll just take the last couple minutes of today's call to walk through those questions and, for me to answer them to the best of my ability. So today we're talking about, a lot of times in Zacks or in general, we're always caught up in numbers, right? We're always looking at growth rates. We're always looking at PE ratios. We're always looking at numbers, and obviously numbers, tell, a lot, but sometimes we miss the underlying story behind the company that we're looking at. And, sometimes a client may call us and ask us, hey, what do you think about this stock? And if you're not, fully aware of, what they're doing, then, just looking at PE charts or revenue growth may not be telling you the full picture. Today's call, we're going to review some of the tools that you can use to basically understand the story of a company, and not only understand the story, but do it very quickly in under 10 minutes. So our call will, take more than 10 minutes, but that's mainly because I'm going to just walk you through it and explain what's going on. But once you have this routine set up, it'll be very, very quick and easy for you to watch, or for you to understand what has been going on for a company over the past 1 year, over the past 2 years, and also what the market is focusing on that specific company over the next year to 2 years and beyond that. So let's take a look. So today's examples are going to be Amazon and AbbVie. So we're just going to take those two, since, those are companies that, we're all pretty familiar with, but, there's a lot that we may not know about those companies. And so we're just going to start with, with those two here. So I'm going to just, in my ZRS, I'll type in, Amazon, and I'm going to have it set to the peer group. And we're going to talk about who exactly is in that peer group in just a second. And I do apologize, actually, in advance. My computer has actually been running a little slow here today. So if we do, hang up, it's just my computer. And it's been happening with other, software applications too. So please bear with me as we walk through this here. But so we're going to take a look at Amazon. And the very first thing that I would like to, review is the equity research report that we have. And it's available under research, equity research, and analyst report. And I know a lot of times we have an apprehension sometimes on reading analyst reports, because they're, obviously the opinion of one person, and, no one has a crystal ball. No one is an oracle. No one really knows what the future holds. But that's not really why this report is important. It's not so much the recommendation or the estimates that these reports contain, but it's more so a summary of what has been the story of the company. And that is more along the lines of being factual, just purely facts-based rather than opinion-based. And you can see that here. So in the executive summary, we'll just skip all of the recommendations and just go straight to the summary. And we can see that Amazon reported mixed first quarter results, where earnings missed the estimates while revenues beat the same strengthening. AWS services contributed well to the top line, as well as AWS gained solid traction among healthcare workers, medical researchers, educational institutions, government organizations, and so on. And so I'm not going to, spend our entire call just reading you this report. You can obviously read this on your own, time here. But I just wanted to highlight that this executive summary in one paragraph really does a good job at explaining to you what the current situation is with the company. And you can see here that AWS is mentioned a lot, in this executive summary here. And AWS is really what's going to be driving the company. So first and foremost, that's, gives you an idea of what is the biggest conversation driver behind the company, in this case, AWS. And we're going to see a little bit more about why that is. But then if you go on to the report on page 2, this gives you a bit of a broader big picture overview. So that way, if you're not fully aware of what AWS is, let's say you're just, you've been living under a rock for the last 20 years and don't know what Amazon does at all, then this second page gives you a really good executive summary on what the company does. So again, right now we know that Amazon.com is one of the largest e-commerce providers with sprawling operations in North America and now spreading across the globe. So it, is primarily involved in retail. So we know that, everybody knows about that. But also, Amazon also enjoys a dominant position in cloud computing, particularly in the infrastructure as a service, IaaS space, thanks to Amazon Web Services, AWS, which is one of its high margin generating businesses. So again, that gives you critical info right there that, there's retail. And retail, if we know a little bit about it, is not usually very high margin, but, cloud computing is. So that's, we see that those are the two primary business segments. Within the first, minute of reading this report, we just figured out what their two primary business segments are, retail and cloud computing. And then you can see a little bit of a discussion into other, businesses that they are involved in. And then the third page goes into the reasons to buy. So this gets us, a little bit more info on, what they're doing specifically that is creating value relative to other players in the space. So we can see that they're one of the largest e-commerce companies in the world. Here's a key snippet from that. It's benefiting from its Prime program, delivery, and logistics systems in the e-commerce space. Further, its dominant position in the cloud market is a positive. So again, this tells you, the reasons to buy, why there is a bullish tone behind the stock. So that gives us, key bullet points on that. And so it's really not necessarily us telling you that this is what's going to happen, but it's really to put you in the driver's seat to really understand and digest what the thinking is behind, the stock, what the sell side is thinking, what the buy side is even thinking. So these are the key reasons to be buying. And again, a big conversation driver behind the company is AWS. So you can see exactly what is driving that. And over here, there's a little bit of discussion in that. So even more encouraging is the fact that AWS generates much stronger margins than the traditional retail business. That's what we just said. And that would remain a positive for the company's profitability as it continues to grow in the mix. And really, the question is why? Like, why? Where is that growth coming from? We know that, okay, it's a high margin business. It is, software as a service. But where is it coming from? Where are they gaining that share? Or where is that top line growing from? We know it's high margin, but where is that revenue growth coming from? And you can see here that there's a little bit of commentary that AWS is gaining momentum with customers, including Western Union, Klarna, Old Mutuals, even the Seattle Seahawks, FINRA. And so you can see right here, just by reading this, that there is a wide range of companies that are their clients. You have Western Union, which is more of a traditional, money lending, or, peer-to-peer, money sending service. But then you also have, insurance company. You also have a professional sports company. You even have a quasi-regulator in FINRA. You have, Caterpillar, which is in construction. You have Emirates, which is an airline. So you can see that, their customers are very, very diverse, just by looking at this right here. So that basically means that, their customers could be just about anybody, no matter what segment or what industry or even what geographic region that you operate in. So a lot of really key intel is contained right in this report to really understand. And so if you're going to sit down with the client and talk about, a company that they brought up or a company that you have in their portfolio, these are, some of the key points that you can bring up, during that conversation. So again, just for your own internal analysis, as well as when you're sitting down with clients and helping them understand why you own Amazon in their portfolio, or why you own AbbVie, which is what we're going to take a look at in a couple of minutes here as well. But as with any company, it's not just positives. It's not just rosy, picture. There's also reasons to sell. And here are, those, points right here. So it really gives you and empowers you to understand, what the key, selling points are, but what the key, bearish points are as well behind the company, and allows you to weigh the positives with the negatives to essentially determine whether the positives outweigh the negatives or whether the negatives outweigh the positives. So, there's a growing international business, and the key points here are kind of, listed out here, that rising operating expenses to support the expansion of businesses into new markets and territories and grow its volume of content remain major concerns. So again, there's an element of cyclicality. You can see this point right here that the AWS business is bringing an element of cyclicality into the business, which means that, essentially if you read into this, it's basically saying that there's a lot of upfront costs. So earnings and operating income go down in the very early years, and then the profits come in later on. So in the initial ramp up, it really hurts profitability. And so that could be a negative for the stock in the short run, but in the long run, it could be, a very, very good and lucrative, investment that the company is making. But, again, it's a thing to be aware of, that, if earnings go down, then we should know exactly why they're going down. And that could be because that they're, investing very heavily in these high, capital intensive, initiatives. So a lot of critical intel behind the company here. I won't go into the entire report, but this is the place I would go personally to get up to speed on a company if you're not familiar with it. But even if you're familiar with it, this is the place to go to really understand what the story is behind the company. Amazon started off as purely retail. It started off as a bookseller. Now it's selling a lot of things globally. But then it's also, in cloud computing. And it, as we saw just now, it has a very wide variety of clients that are, essentially subscribers to AWS. And so that's been essentially the bull case, or really the entire story behind the company over the last 10 years. So now let's switch over to the next one here. But what I'm going to do here is, in order to make this as seamless as possible, I'm going to introduce this concept of pitch books. And pitch books right here allow you to essentially, string together all of these various different charts and graphs and reports that I'm going to show you into one sort of seamless workflow, so that you can, once you have it set up, it really will be, less than 10 minutes that you can flip through all of these charts and reports and understand the company in a very short period of time. So I'm going to create this new pitch book here, and I'm just going to call this 10-minute analysis, and I'm going to add that very first research report that we added, which is under research right here, and I'm going to add the analyst report, and I'll go ahead and save that. I'm going to add one report right now, which is just the analyst report. I won't add any of the other charts just yet, and I'll show you exactly how to add to this report as we go. So now I just set our 10-minute analysis pitch book, and now it's going to bring that up. You'll see that listed right here under this pitch book section. And within that pitch book, you'll see that right now we only have one page, which is this analyst report. So now the next report that I'm going to show you is just the price and earnings view. And this is one of my favorite views as a quick, very, very quick and easy way to understand the stock price and how it has moved in relation with earnings. And as you can see here, and I just have this, over the last 5 years, but if I, expand this a little bit more to say 10 years or even more, you can really see how the stock has moved with earnings. And as we'll see here in just a second, again, I apologize for, how slow my computer is moving. But as you can see here, you can really see that the stock price over a 10-year period really has no relation with earnings per share. And that's the bottom line right here. You can see that earnings were actually going down and into the negative. And yet the stock was just continuously moving up. So you can see right off the bat that earnings were actually not what investors were even focused on, either GAAP or non-GAAP earnings. But I'm going to add this to the report because this shows you a lot in regards to telling you what it is that the market is looking at. And right now it's clearly not earnings. So that prompts us to look at, a little bit, into what it might be tracking. But I'm just going to add this to the report because this is a great view for other stocks. And we're going to see that shortly with AbbVie. So to add this into our pitch book, you'll see this little green plus button right here. So I'm just going to add that into our pitch book. And so now we have two views. First, the analyst report, and now this price and earnings chart. But let's just take a look at what, might be a better number. And I'm going to go in here into relative price, relative fundamentals. And in here we have a EBITDA chart. So, or we have a free cash flow chart. You can look at either one of these or all of these to really look at, okay, if earnings are not what the sell side or the buy side is paying attention to, then what is? Is it revenue growth? Is it EBIT? Is it EBITDA? And, we'll just look at EBITDA for a second. And now you can see suddenly that, okay, now this starts to make a lot more sense. That EBITDA could be the number that people are focused on, because you can see that this has a much higher correlation between the stock price and EBITDA as an example. So you could add this to the pitch book, or you can look at something else. Like, for example, free cash flow. Let's say maybe earnings are not what people like to look at, but maybe free cash flow is, or maybe it's not. And boom, you can see right here that free cash flow even has a much better correlation to the stock price just by eyeballing it than earnings per share. And you can see that one of the big reasons for that, as we just saw in the analyst report, is that, a lot of what they're doing is capital intensive. So you can just, quickly look at not just earnings, but maybe there are other metrics that the market is focused on that earnings are not telling you about. So again, this is a great little chart right here under this relative price, relative fundamentals to just quickly look at, if it's not earnings that the stock is tracking, then what is it? Is it revenue? Is it EBITDA? Is it cash flow? Is it free cash flow? So, this is a great, little, exercise to really understand what the stock is tracking. So rather than showing earnings growth, this is the chart that I would rather show as free cash flow growth, or even better yet, the EBITDA, growth as well. So that's another, thing to pay attention to. So really, what's contributing to this? The big question is, where is this growth coming from? Right? We saw that there's endless growth right here. Where is it coming from? So there's another chart that I'd like to show you, and that's under estimates. And if you go under surprises, there's this really useful metric that I like to look at here, non-financial metric surprise. And this is a very company-specific, report where you can look at the company-specific segments, and you can see the breakdown between AWS, International, and North America. That's how Amazon likes to present it. And you can see where all of this growth is coming from. So like if I just saw here, this is showing the operating income. So I'm guessing that's EBIT, right? So that's after most operating expenses are considered. you can see that, AWS has contributed it's gone from about $2 billion in operating income, up to $3 billion as of Q1 of 2020 here. So that's, huge growth in less than 2 years. That's a 50% growth rate in less than 2 years. And this is on operating income, by the way, not on revenues. So this is a very close, a very close correlation to the bottom line. 50% growth on AWS. If I switch over here to operating income international, check this out. This is actually negative. So you can see that their retail businesses are actually losing money internationally here. So this is it's actually taking away from that. And if I switch over here to North America, you can see here that it's gone from about $2 billion, and actually it's gone down to $1.3 billion. So you can see here that, essentially their retail businesses in North America have actually gone down in operating income from 2 billion to 1.3. So ultimately, you can see here that the vast majority of their operating income growth is attributable to AWS. So right within these couple seconds here, you can just understand exactly what's driving that bottom line, what's driving that operating income. And it's all AWS. That is the name of the game, for Amazon. So I'm going to add this to our pitch book as well. And then another thing that I like to look at again is we saw in the discussion that AWS is high margin and retail is not. So let's just see that. If we wanted to see that in visual form, we have a chart here. It's under the custom tab under Zacks default templates. And you'll see that there's a chart here called margin analysis absolute. And this is just one of my favorite charts to understand what's going on and what's driving the bottom line. And you can see how that has changed over time. And I'm going to reduce the time frame of this chart down to 10 years. And you can see here at the top panel is revenue growth year over year. And you can see that it actually hit a trough, and it actually looks like it's about to turn back up on the top line here. But check this out. You can see that gross margins, I'm going to display this data here. Gross margins have gone from 22% back in 2011 all the way up to 40% plus, as of Q1 of this year. So you can see that that's exactly where the story has been, increasing gross margins. And again, you can see that that's attributable directly to AWS. You can see EBIT margins as well have actually been going down as they invested in AWS in the early years. And now it's actually up, to over 4%. And that's been the reason why net margins have gone up significantly as well, from, very, very small numbers, to, 3.5% or so. So I'm going to add this here as well. So you can literally see the effect that AWS has had on their margins. So I'm just going to add that to our, to our pitch book as well. And as you can see, we're stringing together a really nice pitch book here of these critical views. And lastly, I'm going to go to the consensus model. And this consensus model is really important because this will allow you to understand, what the sentiment is at the segment level in terms of the forecasts, for AWS or for Amazon overall. And I'm trying to go as fast as I can here. So, because we're approaching, 25 minutes. I also want to spend some time talking about AbbVie. So I'm just going to show you this really quick here. This is a great supplement to your overall analysis because this is a full income statement forecast of the company, and this is coming in from the sell side. So we actually collect all analyst models that are being published from across Wall Street, and we will provide you these numbers in a very easy and distilled way, so that way you can look at what the sell side thinking is. And so this is the income statement. I'm just going to go over here to segment details, and I'll just highlight this right here so you can see very easily that these are the estimated numbers, and then these over here are the actuals as reported. And you can see, exactly where the growth is coming from. You can see that, total North America sales are actually projected to increase from 170 billion last year to 213 billion. You can see AWS is about to grow from 35 billion to 45 billion. So a lot of top line growth. But as you go into here, you can see that, North America operating income, as we just saw, is actually expected to decline from 11 to 7 billion. Same thing with, on a GAAP basis. And international, as we saw, is actually a loss leader here, expected to lose almost $900 million. But check out AWS at the operating income level. This is not revenues, but it's at operating income, EBIT, and that's expected to double, almost double from 8.9 billion to about 16 billion. So right there is the key. That's the crux behind the entire story of Amazon, is that even if they are experiencing declining, operating income from their retail businesses, AWS, is providing the lion's share of growth at the operating income level. So revenue growth is there, but they're expected to decline in operating profitability. However, AWS is picking up all of that slack and then some, to provide the sort of the underpinning behind Amazon. So again, in these couple of moments right here, we really understood exactly what's going on with Amazon. It's all AWS. They're doing great on revenues, but it's all AWS when it comes to the bottom line. So we really understood that in a couple of minutes here. So I'm going to switch over to AbbVie now. We've already spent a lot of time on AbbVie. I'm just going to go over the key elements of AbbVie. This is going to be the same exact analysis. So now, since we already have this pitch book created, I'm just going to go over here into the analyst report and just quickly look at some of the key points right here. AbbVie, this is switching it from an entirely different industry, which is e-commerce as well as cloud computing, to pharmaceuticals. But you'll see here how versatile this proposed workflow is, where we can read exactly what's going on with AbbVie right now. Expects that the COVID-19 crisis to hurt its business in Q2, but AbbVie's key drug Humira. So bingo, right there, it tells you exactly what the key driver of AbbVie is. It's Humira. It's their top drug that they produce. But also it has a couple of others, Skyrizi and Rinvoq. They're both late stage drugs that are that have expected good potential. And here's some of the discussion behind what has been going on with the company. You can see that it was a spinoff from Abbott, so that's again another critical piece of intel. You can see that these are the key segments that they operate in: rheumatoid arthritis, cancer, psoriasis, Crohn's disease, HIV. So you can read into this report and really understand exactly what they're doing. And you can see here that here is something that has been very recent news that's going to be the driver of AbbVie, going forward, which is their, purchase of Allergan. So they, bought Allergan in a blockbuster acquisition. And, the reason behind that, again, is to right here. AbbVie is heavily dependent on Humira and is looking to diversify its portfolio. So therein you see right here exactly why AbbVie bought Allergan and the fact that it's heavily dependent on one product. So that's the report behind this. And you can see here that I'm going to go into a couple of these other items here. Like if I go back to the next, chart, our price and earnings chart, this is actually going to be a lot more relevant because as we saw with Amazon, earnings are not really that important for investors. But you can see here for AbbVie, they are. And for many, many years, earnings were actually, the stock was trading at a nice, PE multiple. You can see it was trading comfortably above this earnings line. But starting in 2018, something changed. And it really got this super, PE multiple compression. And why is that? Why did that happen? So that's the question that we want to ask, is why is that happening? And I'm going to actually insert one chart here that I didn't add in the previous chart. I'm just going to add, there is a custom chart that I built here, and I can walk you through building this chart as well. This is a really, really good, chart that I look at here. And I think I actually clicked on the wrong one. Apologize. Let me back up here. There's a chart that I created, and you can create these types of, 4-panel charts, and you can mix and match whatever items that you want to see, for, these types of quadrant views. But there is a chart that I made. My computer again is running really slow. I apologize for that. But one thing that I like to look at is, what's the growth of the company and what is the efficiency of the company? Because AbbVie is more of it's not so much a growth stock like Amazon is, but it is a high profitability stock. So I like to look at, what's been the growth rate, right? What's been the growth of the company and what's been the efficiency of the company. So for a company that has a sort of a stable and mature business like AbbVie, I like to look at exactly that. So you can see here that AbbVie has had, roughly an 11% revenue growth, at the top line. You can see that right here versus the peer group. As well as you can see return on assets. AbbVie trades at a substantial premium in terms of its efficiency. Return on assets is about 18% versus 10% for the peer group. And yet, for some reason, I'm going to switch this to percent growth here so we can see how, AbbVie growth has been relative to the peer group. And you can see that AbbVie has really done significantly better compared to its peer group. You can see who the peer group is if I just click on this little link here. Here's, who's in the peer group: Sanofi, Bristol Myers, Glaxo, Merck, Eli Lilly, Novartis. So relative to that peer group, AbbVie has actually done really well in terms of revenue growth. And you can see that that could be because of, what we saw in the report, Humira. And that's, continuing here. And here's that, big jump in growth that's expected here, and that could be attributable to their acquisition of Allergan, right? As we read in that report. So they've done really well, but shares have really lagged. And so why is that? So I'm going to jump straight to the very last piece here, because I want to kind of cut through, some of this for the sake of time. But here's the crux of what I was trying to say is, why have shares lagged, right? That's a big question of investors. And right now, if you're looking at the stock, or if a client is asking you, well, we own AbbVie, but it's really done really poorly compared to the peer group. And why is that? Why do we still own it? Here's why. I'm going to go to that last, consensus forecast right here. And we're going to look at exactly what's been going on. And we can see very quickly that in this model, we will see what the consensus forecasts have been, as well as what the growth has been historically. So I'm going to go back into the key drugs tab. As we saw previously for Amazon, we had business segments. But since we're looking at AbbVie now, it's not going to be business segments. It's going to be labeled as key drugs. And this is the case for basically all pharmaceutical companies that we do this for. It's going to be all key drugs. So I'm going to show you exactly, why the, what's been going on there. And you can see that over here, these are all the estimates. And you can see here at the very top, Humira, very, very profitable, very huge revenue driver, 19 billion this year, expected to grow steadily to 19.5 billion next year, 19.9 billion the year after. So it looks like everything's doing great. But look at this right here, 2023. We suddenly see a drop in Humira sales, 19.9 billion to 16.5 billion. And then look what's happening here. It's falling off of a cliff. And this is, keep in mind, this is their biggest revenue driver. And that means that their biggest revenue driver is about to fall right off from 19.9 billion at the very height in 2022 to 16.5 to 12.6 to 9.7 to 6.5, all the way down to 2.2. So we have exponential decay of their biggest drug in terms of revenues. So, that's the reason why, AbbVie has sunk. However, that's the reason why they acquired Allergan. You can see here that there are a couple of other things that are going on. And if you really sort of comb through this report, this goes through all of their other drugs that are in their drug portfolio. And if I go down here, you'll see very quickly, down here to row 803. This may take you a few minutes to tab through here. Whoops, go back here. This may take you a few minutes to take a look at, but you'll see that all of this information is right at your fingertips. If we go back down to, through this entire, portfolio of drugs, they've got a lot in here. And I'm just going to call your attention specifically to a couple of these. Row 803, this gets into Orilissa, is, one of their drugs that's currently in phase 3 clinical trials. And I'm going to, highlight, this so that we can just look at the estimates right here. And, you can see here that it's going to go from, this specific drug is going to go from 189 million to 1.1 billion. So that's a pretty sizable, increase. However, that's still a drop in the bucket compared to the loss in revenue from Humira. But you can keep going down this list and you can see that there are other drugs that they have in the pipeline that's in the works that, have a very high likelihood of essentially replacing. And you can see this right here, Skyrizi. Again, this is a phase 3 clinical trial drug. Right now, it's expected to do 1.4 billion this year. But look at that. It's expected to almost 5x over the next decade, up to 6.4 billion in 2029. And again, if you keep going through this report here, you will see exactly how AbbVie is planning on replacing Humira. Because Humira, as if we got into the report a little bit more, there's a lot of competition coming from generics. There's competition coming from other drugs that have similar, efficacy. So that's why AbbVie, in a nutshell, has been really under pressure. But if we continue to go through this report, you'll see that AbbVie is making investments into other drugs that are going to basically reduce their dependence on Humira almost entirely. And here's another example. This drug, which is in phase 3, clinical trials as well, expected to do about 510 million up to 5 billion plus. So that's going to be a 10x over the next, decade or so. So you can see just from these, a couple of drugs right here, and I know that there's another one that I found, row 608. We see this drug right here, which has actually already received FDA approval. You can see what the status is. Expected to do 1.3 billion this year, growing to about 3 billion at the end of the decade. So again, each and every one of these drugs that they have in their portfolio, again, also due to their acquisition of Allergan, which itself was a profitable company. This is how AbbVie is showing that they're planning on, essentially replacing or reducing their dependence on Humira. So again, this I know I went into a lot of detail here with these models, but really it's because I've been walking you through and just explaining a lot of this. But as you kind of work through this this workflow right here, you can really go through and understand and paint the picture or the story behind the company. And to me, this tells me that AbbVie is super cheap in terms of their PE multiple relative to the peer group. They've got better growth than the peer group. They've got better efficiency than the peer group. And the number one concern that investors had, which is declining Humira sales, is being directly addressed by these other drugs that they have in the portfolio. So those are the key. That's basically your investment thesis. That's the summary of, what the key issues have been and what they're doing, to address it. So hopefully this has been really good to help understand to help understand the story of the company that you're looking at. This I've tried to make this as general as possible, so that way this can be used for any company, not just a growth company like Amazon, but also a mature and highly profitable company like AbbVie, and everything in between. And we just have one question, actually, I just saw in the GoToMeeting. Someone is asking, how do we find the margin analysis chart? It's right here under the custom chart tab. And if you go to Zacks default templates, it's this option right here. It's about halfway down. You'll see it says Zacks margin analysis absolute. That's the chart that I like to look at, that shows you the revenue growth of the company. And you can see here that just like we saw for Amazon, AbbVie is actually turning a corner as well. It hit a revenue growth trough of about 1.5%, and now it's starting to show a rebound in that growth rate overall. And you can see the gross margins as well as net margins. And you can see that this has been a phenomenal business. I mean, AbbVie has been very profitable. You can see that their margins have been increasing. Their top line looks like it's actually turning a corner. And with this acquisition that we just read about, it looks like they've put all the pieces in place to essentially directly address the biggest concern that investors had, which is, that headline that we saw here, that very, very scary headline of declining Humira sales. So hopefully this has been helpful for everybody. Again, if you have any questions that you think of afterwards, or if you wanted assistance in putting together this pitch book, or if you want to go through any stock that you have in mind using this exact same thought process, then please do let me know. You can email me at ZRS@Zacks.com. Again, ZRS@Zacks.com. And I'd be more than happy to walk you through any of this, to go through any stocks that you're currently looking at. So again, hope to see you again at future, Lunch and Learn webinars. And if you have any suggestions on what we should cover next in a future webinar, please do let me know as well. All right, thanks everyone. Thanks for joining in, and talk to you soon. Take care and stay safe.